Good evening, everyone, and welcome to the Future of Fintech Fireside Chat with Razak Ahmed. My name is Anthea Hartzenberg, and I head up external engagement here at OfficeN, and I'm really delighted to have you join us this evening. If you're joining for the first time, this is the fourth event in our series. If you're keen to check out any of our previous chats with Lyndon Subroyan, who's the Global Head of Digital and IT at Investec, or Shola Akinlade, who's the co-founder and CEO at Paystack, you can go to our YouTube channel or simply go to officen.com to check any of those out. Tonight, I'm really looking forward to the conversation with Razak, and we're going to kick off the evening while we wait for the rest of the audience to arrive with a quick poll to start us off. And it is a couple of questions for us to get to know you a little bit better. You'll have about 2 minutes to complete the poll, and it should be on your screen right about now. So the first question that's on the screen there is, at what age did you start coding? Which is, I think, a very relevant question for our audience. We do have a huge audience from South Africa, the tech community, so very keen to see what those results look like. Phil and Razak, actually, at what age did you guys get interested in coding or start coding?
Well, what if someone doesn't code at all? That's not here.
That is a very, I actually, when I was thinking back now to your background, Razak, I realized that we actually never discussed the question. It must be very interesting working at a fintech company, having started a fintech company with no coding background. Is that putting you in a good stead, or what do you think?
Yeah, well, I am not the coder. My co-founder is, but of course, I have strong interest in coding. So I know my way around it, but not that I code actively, definitely. So my CTO
like
is that, yeah.
Cool.
Less than 12. Less than 12, I'm proud to say.
I like that.
11. But it was a very long time ago. I'm older than I look, so it was on the Acorn Atoms at school. The Acorn Atom was the one before the BBC Micro, 1981 it would have been. Yep, that was, I became instantly obsessed, like neurotically obsessed with these machines. Once I saw them in the computer room, I was just like thrilled. So,
nice, a nice bit of history there as well. Phil, let's jump to question number 3 then, tabs or spaces?
Well, these days I don't code very much anymore because it made me so neurotic I had to stop in the end, but I mean, tabs, really.
Cool, that can be a very controversial question, I believe.
Absolutely.
I think question number 4 is where, sorry, Razak?
Yeah, my first interface with coding basically was in VBA Excel as an analyst. So it wasn't the core programming languages as we have it now, but there are a lot of logics that you actually need to put together to create financial models and stuff like that. So that was like my first experience with the logics and stuff like that. And it was quite exciting. And that actually has a root to where we are today. It plays a part, important parts to where we are today as a company as well.
I love that. Definitely looking forward to hearing a bit more about the history of Cowrywise a bit later. The final question there, how do you feel yourself for the day? And personally, I have to say that I am a bit of a tea fan. Rooibos tea, South African favorite, kicks me off in the morning. I have made the transition from coffee. So yeah, very good for me. Razak, Phil?
Well, I had a sleep. I just a bit of a nap, and then I've been taking water. I take a lot of water these days, just because I'm trying to take less of carbonated soft drinks. So I'm battling with water, and I've been seeing the changes. So it helps a lot in terms of keeping in shape and so on. I'm complementing that with some exercise. So I've not been very active with exercising, but water intake has been something I like a lot these days.
Cool.
Right.
Hydro homie.
Black coffee for me, but not now, thanks. Save it for tomorrow morning.
Good to know. If I look at the results coming in, it looks like most of the audience are also hydro homies with you, Razak. Water is leading by about 11%, which is very good to know. And then Tabs, is very strong ahead in the battle between Tabs and Spaces with
Thank God for that.
73% of respondents. And then the age at which the audience started coding is kind of split between, it looks like the majority of people started between the ages of 13 and 24. There's about 3%, one person who started under 12, which is also very interesting. But yeah, interesting results. I'm going to give the audience about 10 more seconds, and then we'll close the poll for this evening. Yeah, Tabs is the outright winner. Still, Black Coffee is in at about 26%, also not bad. And there's other, 2 people selected other for the fuel question. Thank you very much, everyone. I am closing the poll now. Thank you so much for participating and giving us some of the insights there. You should be seeing the results on your screen, and we'll also share it later. But this evening, we are jumping into our fireside chat with Razak. Before we do that, I just wanted to share a bit of housekeeping with you. This is a Zoom webinar, which means you can see us, but we unfortunately cannot see you. So please be mindful of that as we go through the evening. Another important thing here is you can submit your questions using the Zoom Q&A functionality. There is a chat functionality which you can use for adding random thoughts or comments throughout the session, but the Q&A is best to pose your questions. A few other things to note before we jump in: if you drop off the call, simply join again with the link that you joined originally, so when you joined at 6:30. And then finally, we will be sharing a Q&A with you, a survey with you after the event. We'd love to hear your thoughts on the event this evening, so please do share your feedback with us. For now, though, I'm going to be handing over to Phil, who will be our moderator for the evening, and I look forward to the conversation. Phil, over to you.
Thanks. So I'm Phil Barrett. I'm head of product at OfficeN. I'm looking after tonight's fireside chat, asking the questions. I'm pretty excited about this one because I certainly, in my previous career before I arrived at OfficeN, did plenty of fintech work looking at how you get people, ordinary human beings, to do things like spend their money wisely, save their money, invest their money, that kind of thing. And these are very intriguing, difficult topics. There are lots of human psychology as well as lots of amazing technology in there. So it's going to be super cool to be chatting to Razak. Razak is the CEO and co-founder of Cowrywise, in case you didn't know. And Cowrywise is a fintech company that is democratizing access to investment products and digitizing the wealth management industry in Nigeria, which is no small challenge, I would imagine. It's pretty hard to do in South Africa, and I bet it's even harder in Nigeria, so we'll find out. It's a Y Combinator company and was part of the most recent cohorts of the Catalyst Fund program. 2019, Cowrywise was named by Inc. as one of the 100 companies in the world to watch out for, which is pretty breathtaking. And Razak is one of only 400 CFA charter holders in Nigeria, which is quite amazing. I would have thought there would be more. Well done, Razak, anyway. So that's a bizarre introduction to Razak with a mixture of different factoids about him. but thanks for joining us all the way from Lagos.
Yeah, thank you, Phil. I'm actually excited to be here. I'm looking forward to this discussion.
Cool. All right. So before we start, one reminder to everybody out there listening and enjoying the show, you should add your questions to the Q&A. As we go through this, things will pop into your head. Stick them in the Q&A challenge, and Anthea will select the most appropriate ones, and we'll ask those questions after 7 o'clock. Okay. The first question for Razak, though, we have is getting some context. So Cowrywise is a Y Combinator company, and it's the first Nigerian startup to be selected for the JP Morgan-backed Catalyst Fund Accelerator portfolio, which is a pretty impressive resume. So can you tell us the Cowrywise origin story? How did you get there?
Yeah, thanks, Phil. I've had the opportunity of answering these questions sometimes past. And every time I answer the question, I begin to see a new dimension to the whole original story, frankly, like a new refinement, because for every event that happens, there is always that connection with the roots at every point in time. So the origin didn't actually happen at a point in time. It was a journey, actually, where we are as a company and how we started. Was a combination of so many events in the past, ranging from how my co-founder, Edward, came in. We attended the same university in Nigeria here, not in the same department, but interestingly, his brother was in my department. We're in the same department, and we're in the same dormitory in the university with his brother. And we actually had some interesting projects together while we were in university. And that project was a student info enterprise. It's currently called Enactus. It's a student competition that involves developing economic empowerment projects in different communities, and then coming up with the impacts of such projects and presenting the project to a panel of judges. And then the team that wins at the national level will be representing that country at the global level. So we've had the opportunity of working together at that point while we were in the university. Then after school, everybody left. He did computer engineering. I did economics. So in terms of career, our paths were different, right? He joined InterSwitch. InterSwitch is one of the biggest fintech companies in Nigeria. And I think arguably in Africa as well, because they have presence in East Africa and all of that. I joined investment management, which is very much in line with my career path. But the meeting point started to come in when I started in my previous place of work, started having a lot of questions around where people can actually invest money, especially the retail investors from schools, from the industry, those who are not in the investment management industry, who just started earning money, their first salary job, and then looking for where can I actually put in money. In the Nigerian investment industry, in the Nigerian capital market, the stock market was quite interesting at that point. That was in 2008, 2009, just before the global financial crisis hit, and then the impact came into Nigeria. So a lot of people actually lost money. So there were retail investor apathy generally in terms of where will they put money. People were very scared. So the whole idea of Cowrywise began to take shape when we thought about how do we leverage telecoms infrastructure to make the investment opportunities available to everyone. So at that point, Edward had moved from InterSwitch to African Telecoms Advantage, and they were serving MTN infrastructure across Africa. So he was pretty much into the telecoms industry. I was into the investment management industry. So the idea was, how do we leverage the telecoms infrastructure to provide financial access to millions of people that the telecoms company have actually already had access to? But that failed. It didn't work because the economics, the unit economics was just not making any sense. just because what the telecom companies understood in this part of the world is basically something similar to a value-added service. So our idea then was that we will transform recharge cards, which is a popular way of topping up line, with transform recharge card into money, and then move that money into an investment vehicle, right? So to the telecom companies, what they were saying is the movement of cash, and they were asking for a 30% cut of that. So if the telecom companies get 30% of that, so a customer, say for the sake, hypothetically, a customer moves $100 and the telecom companies get $30. So we get $70. So when a customer comes back for his $100, where do we get the $30 from? So from technical point of view, it was very feasible. It makes sense. But from the economic point of view, it was just a dead on arrival. So it didn't work. So that idea was, dead on arrival. And then we had to look for a different ways to actually make that idea work. So the original vision was very clear, very simple. We're very clear from day one. We wanted to make financial services, especially savings and investment products, accessible to the mass markets. So telecom came in because they already had millions of customers. So we're like, okay, let's just ride on their successes. But that didn't work. So at that point, that was when we had development of modern payment infrastructure in Nigeria. And that gave us an option to think about, right? So we had the likes of, the development of APIs that allows recurring charges on cards. And so we had to experiment with that to see if it would work. And it worked. Like, users started using it, like friends and families. We hadn't gone public then. That was in late 2016, early 2017. We hadn't gone public then. And then users started using it, friends and family, started getting feedbacks. And then it was just me and Edward. Edward, as I mentioned earlier, we attended the same school. He's a CTO, he's the guy programming the entire thing. He's not a good designer per se, but at least he put up something on the web that works. So we're just using the web platform only. We didn't have an app, a mobile app. It was just the web platform, but the web platform was a bit mobile responsive. So it wasn't that bad after all. But the most important thing is that it worked. So we're able to charge users from their cards. We're able to create plans for them, and we're able to link them up with a savings product with an existing financial service provider in the industry. So that value chain was successfully created, and the UX wasn't bad, and users love it. So that feedback was actually gave us that additional impetus that probably we're actually doing something right. So the overall history wasn't something that just happened at a point in time. Looking backward, the dots were connected right from our experience in school, right from the different career paths that we chose. He was in tech, telecoms, and financial technology. I was in investment management. And then we brought tech and finance together to form Cowrywise, basically. So it was like a perfect marriage of technology and finance coming together to solve a major problem in the country.
Fantastic. So you and Edward were the first two, but your third employee was a designer. So why was it so important for you to focus on product design that early on in the business?
Yeah, so he was actually the first employee, so to speak. Yeah, so myself and Edward co-founders, and then the first person we brought in, that was Faye. Faye's story was quite an interesting one, because as we all know, there is a very strong role for psychology, behavioral economics when it comes to digital products, right? And that behavioral economics and the psychology of it can best be conveyed to users through designs. So I got to meet Faye for the first time on a public forum in Nigeria. There was a forum then called Radar in the Nigerian tech ecosystem, where tech enthusiasts to come in and discuss different topics, ranging from design to back-end development, everything tech. So just somewhere like Quora, right? Where you can just talk and talk. Then there was a day Faye designed the logo of GT Bank. GT Bank is the most capitalized or the biggest bank in Nigeria in terms of market capitalization. Yeah. So he redesigned GTB logo for free and he posted it in the forum. And I looked at that logo and I saw it clearly based on my own assessment that the logo he redesigned out of boredom was actually much better than the actual logo that GTB was using. But a lot of people actually do that. A lot of designers, when they are bored, they just come up with a design and they come up with something. So immediately I saw that logo, I knew the guy who could have designed this out of boredom, if he's actually given a good work to do, then we might actually see something fantastic out of it. So I messaged him privately that can we have a chance that I really liked the logo he designed. Then he was excited. Oh, thank you. He appreciated it. Then we fixed the meeting. And then he came around to our office. And at that point, we were about making a very important decision for the company in terms of our design. We wanted to upgrade the look and feel of the website. And we couldn't get someone in Nigeria to do that. Most of the people we got in Nigeria that could do it for us were asking for a very, very high fee, and we couldn't afford it. And for some other people that we knew that could do it, they didn't have the time. They were either engaged, and we didn't actually want to contract it out because we knew it will continuously be something we need to build, right? Rather than just a one-off thing. But the solution we got then was actually to contract it out to someone from Hong Kong. And the guy asked us for $500, right? To design it, and then we'll give it out to someone else to render. So we paid him the $500. He designed the product, the landing page. So we showed him the type of landing page we wanted. And after designing the landing page, then it now needed to be, rendered. We needed a front-end engineer to do that. And that was the day Faye came to me and Edward. And we showed Faye the design that, okay, this is the new look we want Cowrywise to wear and all of that. And Faye mentioned that he could actually do it. Well, we didn't trust him. We just felt, okay, if you could do it, that's fine. Then we gave it to him that he should do it. And Faye left the office around 12 noon. And in the evening, Faye sent in the work. The landing page had been rendered and we were blown. Wow. So the guy in Hong Kong, we just called him that he shouldn't worry. He should just go with the $500 that he shouldn't bother anymore. And that's how we actually brought in Faye into the company, like full time. And since then, he has performed extremely, extremely well. So the whole idea around design is, to us, design is about growth. Because as a fintech company, we do not have the luxury of having physical branches like banks do. Every interface that we have with the customer is via digital. The app, the sign up, the user experience, everything is digital. And that means the design needs to be watertight. The user experience needs to be very, very fantastic for us to blow users' mind. So to us, the philosophy around design is about growth and building trust. If we are able to build a product that has a very appealing design and that works, right, we're able to build trust immediately a user interfaces with the products. And in the Nigerian ecosystem, we've gotten a lot of feedback around how design can actually be used as a growth hack, especially when it comes to digital products. And design to us is not just something that looks beautiful, right? It's something that actually works, that creates a fantastic user experience for the customer. And that has always been the philosophy from day one. So I think we were lucky from the beginning, before we went public, to have put design at the forefront of our growth story. So I've put design at the forefront of winning customers' trust. And every design iteration we've done, both on the web and on the mobile apps, the Android app and the iOS app, design has always been at the forefront. So if you want to achieve a growth milestone, we don't just see growth in terms of marketing alone, like outbound marketing alone. We see growth from 3 points of views: design, engineering, and marketing. So those are the 3 things we put together to actually ensure that we achieve growth. And it has been working extremely well.
Fantastic. Jumping a bit though, there's there's the question of the environment, I guess, that you've been operating in, and regulation is always a key part of any environment for fintechs. So there's new innovation, new products and services. Great, that's fantastic. How is that playing out in Nigeria? How have Nigerian regulators responded to kind of some of the new innovations that you've been bringing to the market?
Yeah, so I think it's about timing first, and it's also about aligning the product innovation or process innovation, every innovation in the fintech industry, aligning that with the core mandate that the regulators actually want to achieve. So in Nigeria, for example, the CBN has a very ambitious mandate, ambitious vision of achieving financial inclusion. The Securities and Exchange Commission also has an ambitious mandate of ensuring retail participation in the capital markets, right? And to actually achieve those ambitions, existing models can't work because they've been around for 100 years, right? Well, the oldest Nigerian bank is 100 years old, more than 100 years old. So they've been around for more than a century. So to move the needle, you actually need the innovation in that fintech space. And what we have seen that regulators have done is to actually, regulatory reception has been relatively good from the SEC and CBN. CBN has allowed, they introduced a couple of licenses for payment service providers who are building modern payment infrastructure in Nigeria. And they've allowed them to operate, and they continuously refine the regulatory framework to ensure that customers' interests are protected. And that is actually at the core of it, because if one of the core elements of regulation is to engender trust, to build trust, when customers know that you are regulated, then to some extent, trust is built. Therefore, for the SEC as well, last year SEC launched Fintech Roadmap, which was quite an interesting story. They launched a Fintech Roadmap in Nigeria, which actually, spelled out their vision for the industry from the perspective of fintech, adopting fintech solutions to deepen the market, to build capital formation, and so on and so forth. And early this year, they came up with one of the exposure drafts for crowdfunding, which was quite an interesting part. And overall, they've been relatively accommodating in terms of allowing innovations to thrive. Last year as well, ICC introduced a sandbox to ensure that new products are tested, but that sandbox hasn't been functional as it should be, but the intent actually gives what the SEC is thinking through, what they're thinking about in terms of allowing new product to work. Clearly, I remember one of the engagement we had with SEC in Abuja in their head office last year. And one of the things they mentioned is that in the Nigerian capital markets, the demographic structure of the country is not well represented in the Nigerian capital market. Nigeria is a very young population, population, just like we have in other parts of Africa. Our average age is about 18 or 19, right? But majority of these young people actually don't participate in the capital markets, right? So what you see in the capital market is completely different from, the demographic structure of the country. And that actually cause for concern. Because if we talk about capital formation and, development of the capital markets, you need to put the retail investors in the forefront. And to actually attract the retail investors, the existing investment management companies actually need a different model to do that. The existing model won't attract the retail guy, won't attract the young guys. People who just want to, invest just like they tweet. They want to invest just like they buy stuff from Amazon. They want to invest, they want to open an investment account just like they're opening an Amazon account. So that digital experience is what they've come to be comfortable with. So to build an investment platform or a savings platform that speaks to that peculiarity requires fintech innovation, right? And the regulators are interested in leveraging those innovations to deepen the market, the more. So that's, to a very large extent, regulation has been, even though it's lagging in terms of, regulators are in the innovators are in the forefront, the regulators are coming behind. But probably the regulators could still do more, but overall, their responses has been relatively positive. Also important to note is that in that space, just as we have innovation that are encouraging new investors, especially from the young population, to come into the market and to build a better financial lifestyle for themselves, we also have situations where you have fraudulent platforms, hiding under the guise of an investment platform to defraud people. And that's one major area that the regulators need to come in, right? If the regulators don't come in, then there will be a mix-up between those who are actually doing the real thing and those who are fraudulent. Because right now, anyone can build a website, can build a website and promise people 50% returns. And that's where some people fall victim. Because one, people don't actually understand the fact that you can't get that kind of promised return from legitimate investment opportunities, right? So that is where education also comes in, and regulation. So overall, regulation has been good. It could be better, but it has been good in terms of allowing fintech innovators to progress and to move the needle in terms of the mandates that the regulators have in front of them.
And so where are you planning to take Cowrywise next? What's your ambition in Nigeria or even the rest of Africa?
Interesting question. So where we started out in Nigeria, and what we have seen is that we've been able to build a platform, an integrated platform in Nigeria that wouldn't have been possible 5 years ago. If we had wanted to build this same platform 5 years ago, it would have been very close to impossible to do that. And having built that out, our ambition actually is beyond the Nigeria as a country. We're having a Pan-African ambition, and that Pan-African ambition is about how do we make the African continent, how do we foster intra-African investment opportunities, right? And this is not about moving fiscal capital from Nigeria to Ghana or from Ghana to Nigeria, but it's about empowering the retail investor to be able to diversify across Africa where the opportunities are. So for example, the South African market is much more developed than the Nigerian market, right? And it's much bigger too. Which points to the question you asked earlier about having just 400 charter holders in Nigeria. I know South Africa has thousands, or more than 1,000 charter holders, right? So the Nigerian capital market is not as big as that of the South African market, but Nigerian has the market in terms of retail reach, right? So the question is, why can't a Nigerian be able to invest in the South African market with just some clicks? Why can't a Ghanaian be able to invest in Kenyan market or South African market or the Nigerian market with just some few clicks? And that's the ambition we have. How do we allow intra-African capital mobility and capital allocation to different assets, ranging from equities, ranging from fixed income instruments, and so on and so forth. And that's where we're going, actually. But to actually do that, it will require us to have the opportunity to ride on a Pan-African payment infrastructure, right? Because Africa today doesn't have uniform currency. We all have different currencies, which means if I want to invest in a South African company, there has to be some form of FX conversion, right? Either from Naira to South African Rand, or from Ghanaian cedi to Naira, and so on and so forth. So there has to be a payment infrastructure that allows capital movements and conversion across the African continent. And that's actually in the works, because we've seen some couple of African payment companies having that ambition as well. Just as they've had that ambition and they've executed it excellently in Nigeria and in some other parts of Africa, we are actually looking forward to ensuring that that works. There are other asset classes as well. There have been, real development across the world in terms of definition of asset classes. And blockchain might also be an important element to actually look forward to, especially when it comes to cross-border payments and enabling access to some of the financial services that an average person will not ordinarily have access to.
That is a fantastic vision. Okay, we are going to move on now to questions from the audience. It's still not too late to add your question to the list, people, and see if Anthea will pick it. The first question is one from Richard O'Brien. Thanks, Richard. And he would like to know, what are your key takeaways from participating in the Y Combinator program? Because I guess that was a pretty special experience to be able to participate in that. So what were your key takeaways from participating in that program?
Wow. So initially, we didn't want to participate in Y Combinator. We didn't want to apply, and we applied late. And after the application, after we were successful, we actually knew how silly we were not even wanting to apply in the first place. Because it was actually one of the best experiences we've had at that stage of the company. When we joined, we just had about 2,000 users, registered users when we joined. And we had the vision, but it wasn't very concrete, right? So what Y Combinator enabled us to do is to dissect the vision and understand how to actually build a company that scales. And Y Combinator gives you that opportunity to be able to do that. And the network is extremely rich and powerful. Networks of founders just like you, founders who have built successful companies, and founders who have failed as well, right? So you have a balanced experience from people who have done things that work and from people who have done things that don't work. So you actually know what works and what doesn't work earlier on. So that rich experience is actually very rare to get in many places, but you are able to get that in YC. And the brand as well is a very powerful tool in the tech ecosystem globally. So I think Y Combinator set us on a very, very, very strong footings right from day one. We were in YC in summer 2018. We got in around March, April. We finalized that in October, August, September, October, yeah. And since then, most of the learnings from YC still lives with us till today in terms of where, so just for an example, when we joined YC, as a startup, you're trying to get growth. You're trying to have growth. And most times you might be forced to focus on vanity metrics, right? Vanity metrics in terms of what might not actually count when it comes to long-term sustainability of the company. So one thing that we got from YC is actually to be able to define what we need to focus on, right? To define the key metrics that we actually need to focus on and to work our hearts off to ensure that we move that metric from 0 to 1. And that is actually very important in the early stage of any startup, because if you focus on the wrong metric from day one, it is most likely that the vision will be derailed down the line, because you might not actually be building a very strong value for your customers. But if you face the brutal truths, focus on the right metric, then you are able to iterate quickly and focus on value creation for customers. So the metric we've been defined, the metrics we define, the 4 metrics we define right from our YC days are the same metrics we still focus on till today.
What are they?
We're able to build a very strong foundation on what to build those metrics on. And those metrics align with our vision. And also we had the vision, but we're not, focusing on what should we focus on. We didn't know what to focus on. There are so many things. Are you focusing on registered users, or you want to focus on the transaction flows into your accounts and house, or you want to focus on users that are active and how do we define being active? There are just so many things. So being able to pick out the more important things from the noise earlier on, I think is an important superpower that you can actually get from an accelerator program like YC.
Can you tell us what your 4 core metrics are? Is it a secret, or are they?
Yeah, well, for us, being an investment management firm, we focus first on AUM, assets under management. There is that tendency to focus on transaction volume, right? So if you're a payment company, for example, you can focus on transaction volume because that is what you are monetizing. But in our case, we are not monetizing transaction volume. Our monetization strategy is premised on our assets under management. So that is very important for us. So we could have like $10 million in terms of volume, but what is it that we're able to retain? Are we able to retain just 1 million? Are we able to retain just 2 million? And that is very key. Otherwise, we'll just be having a lot of activities without actually moving towards the objective of the company. Then the second part is defining active users. Like you have registered users. Yeah, you can have 1 million registered users, but how many of them are actually active, right? And that is actually very important. And how do you define being active? Is this someone that logs in into your app once a week, or someone that actually puts in money into the app? So if you're a social platform, logging into your app might be an important metric. But if you're an investment management company, logging into the app is just a secondary metric, probably to just measure engagement, but not the actual metric you should focus on, right? So those are just some of the examples of some of the metrics we defined earlier on, and we're focusing on optimizing down the line.
That is super cool. Okay, next question we have got as a time. Ooh, we're ticking on. Next question is, what would you say was the best thing you did to assist with your growth and build trust with users?
Design. One, design. Second, under-promising. Yeah, under-promising and over-delivering to customers. So what we have seen is that for investment management companies, especially when it involves you taking money from people for management, users always focus on 2 things, depending on the type of users. One can take more priority over the other: preservation of capital and the returns. And given the level of education in the Nigerian investment management industry, especially among the young population, people don't understand why they need to lose money when they make an investment. They don't understand that. So if a user wants to invest in an equity mutual fund, for example, the user only understands that it's an equity mutual fund. You can potentially get 10, 15% per annum, but the user doesn't understand that you can lose 10, 15% per annum. So being able to segment users into different level of education and being able to recommend different investment classes for them to meet their return and capital expectations is actually something very important when it comes to trust building, because we're able to meet their expectations. And when users use the products, they've invested for 6 months or for 3 months, and their return expectations are met, then they are bound to come back and they sing your praises. But if you promise very high returns and you do not disclose the information transparently as much as you should, and down the line, 3 months down the line, 6 months down the line, something extraordinary happens that is extremely different from their expectation, then you've lost trust. So what we try to do at every point in time is to try and under-promise So users can actually transparently see what they've invested in. They can transparently monitor what they've invested in on a daily basis. And they can see how they earn returns or how they do not earn returns. So that transparency is very key. Communication with user, it's very, very key. So doing that enables us to build trust. So we didn't get trust from day one, frankly. We started in Nigeria at the point where a Ponzi scheme was at the peak in the country. That Ponzi scheme was called MMM. And the amount of Nigerians that participated in that was unimaginable, both educated and uneducated. And it was a Ponzi scheme that promised, like 30% per month, basically, using Mr. A's money to pay Mr. B. So people were used to that kind of high returns, unimaginable returns. And we came in to say, okay, you get 10% per annum. So users were saying, when I can get 30% per month, you are promising 10% per annum. So at every point in time, we align the interest rate on our savings product with market realities. If interest rate goes down, we communicate to users, interest rates have gone down. And these are the reasons why interest rates have gone down. People will try and reason with you. So we build that trust process over time, but it wasn't that easy from the beginning, frankly. But we had to weather the storm, communicate a lot, ensure that the whole process of moving money from customers' accounts, bank accounts to Cowrywise accounts is seamless. Whenever there is an issue with respect to credit or debit, we're able to resolve that as quickly as possible. Traditionally, Nigerian banks would take about a week or two to reverse your money. We're able to do that like instantly. Whenever you make a complaint, we resolve it. So customer resolution of customers' issues is actually an important element when it comes to trust building. Resolving their issue, over communicates with them and on the promise so that when it comes to return expectations, you don't fall short. So when you do that, you're able to build that trust over time. But it wasn't something that happened at a point. It was a process. It has been a process, and we continuously build on that.
Did the Ponzi scheme collapse, MMM?
It collapsed. It collapsed.
Must have been a great day for you when that happened there. You must have been like, yes.
Yeah. So we told you. So what we do right now is to write a lot of content on how to identify Ponzi scheme, right? So one of our key strengths right now is content marketing. So we write a lot of content, educational content, to educate people and have and build ourselves as thought leaders when it comes to investment management, right? So that is an important element in trust building. So if you're able to educate users on how to identify Ponzi scheme, what to look forward to whenever you see an investment opportunity, to be able to identify if investment A is a Ponzi scheme or investment B is not a Ponzi scheme, then you naturally build trust because people begin to trust you as a thought leader in that space. So content is very key, educational content that empowers people.
Fantastic. Okay, next one. Lishan asks, knowing what you know now, what startup advice would you give to your younger self?
Wow. Maybe I should have started earlier, but probably focusing on a different problem, because I felt the timing was right for us when we started Cowrywise, largely, frankly. Modern payments was just coming up, and that provided us the leverage to be able to build financial services on top of that. If I'd started out earlier, probably it wouldn't have been Cowrywise, it would have been probably something else, right? But maybe. But frankly, I think if I had to do it again, there are certain things I would do the same thing, like having a technical co-founder. It's very, very important. Very, very important. If you're building a tech company, then you really want to scale, there are two things that are very important. One is the domain expertise of the industry you want to build a solution for. If you don't have a very good understanding of that industry, it might take you a while to actually figure out so many things. Then second is being able to have co-founders whose skill complement yours, right? So if you are an investment management professional like myself, it won't do me much good to have another investment management professional trying to establish a fintech company because the two skills are not complementary. They are largely the same. So having a technical co-founder is very, very important because from day one, you can avoid a lot of technical debts. And so many things that ordinarily you outsource, you can actually build internally. And there was one thing we did, which I will not do again, which is outsourcing design. We did that earlier, which we stopped. And from the experience we have seen is that when you outsource some of your tech development earlier on, there is no fit for purpose technology that can actually help you build a solutions that users continuously use if you are not an established entity already. Because the tech you're building is an evergreen process. You continuously build, you're continuously in a building mode every single day. Every single day, our developers are building. Every single day, our designers are designing. Every single day, the content developers are building content. So it's a continuous building process. So if you outsource that exercise to be a one-off exercise, there is no way you will achieve the kind of traction you want to achieve quickly, right? So being able to domicile talents, the tech resources, earlier on, I think is something I will do over and over and over again if I have to do it again. It's something that is very, very important because it gives you the flexibility, it gives you the freedom to be able to respond quickly. It makes you agile as a company, which are actually, attributes you need as a startup to be able to survive in a very tough environment.
Yeah, definitely. I think for a startup to outsource development and design it's expensive and dangerous. Absolutely. I've seen it work though a couple of times, but yeah, it's a scary thing to do. Okay, I think this is probably the last one. We'll see how we go. Dan wants to know if you have any plans to pivot beyond investment to, for example, insurance.
Yeah, interesting question. Okay, so the way we look at it is not just investment alone. The way we look at it is wealth management, right? And it's actually a very broad concept because in wealth management, you have, it starts from the basics, savings, then investments with different asset classes from equities to fixed income instruments, currency and so on and so forth. Then you have insurance. Insurance is an important element of wealth management. You have estate planning, right? You have estate planning, insurance, savings, investment, and so on and so forth. And one thing that is happening across the world right now as well is that because of the digital life that we all live today, there is a continuous, there is this consolidation of banking and investment management experience, right? So traditionally, for a bank, what a bank will do is, enable people to make and receive payments using their current accounts, enable people to save using their savings accounts, right? And they grant credits as well. But we've seen a trend globally, which is actually interesting because of what technology has enabled us to do, to be able to use payments as a complementary service for savings and investment products. Because when you save and invest, you need to make payments as well. Either you transfer money to Mr. A or Mr. B, and so on and so forth. So payment, which is an important element of banking, is being bundled with investment management practice because of what technology is enabling us to do. So the way I see us evolving is actually that we'll be the meeting points between, the traditional wealth management products and some elements of banking. Not the core banking like credit, but payment is definitely being commoditized now because you have APIs everywhere. So you can actually build a payment infrastructure. So if you can build a payment infrastructure as complementary products for all your wealth management solutions, why do you need to outsource that to a bank? So I see most of the traditional functions that banks perform, from savings to credit. We have a lot of fintechs doing credit, even though they've not scaled as one would have hoped to. But I think there's been some remarkable growth in East Africa, and that is also happening in part of West Africa here. But payment is getting commoditized. Saving is also getting commoditized. And more importantly, for payments, blockchain will commoditize that the more, especially when it comes to transborder payments, transborder money movement, and so on and so forth. So, yeah, we will have insurance, definitely, and maybe not the plain vanilla insurance, but an insurance as part of a bundled experience that allows us to deliver wealth management solution. Yeah. So it won't be that we're selling car insurance, we're selling this insurance, but some of our products already in the works will have insurance elements. So we'll bundle it.
Okay, because wealth management, you can't do it properly without an insurance component. So yeah, that makes sense. Fantastic. Okay, we are out of time for the audience questions. Time flies. So I am just going to hand back to Anthea, but I'd just like to say thanks very much, Razak. It was super interesting, lots of fun to chat, and also thanks to the audience. And let's go back to Anthea.
Thank you, Phil.
Thanks, Phil. Thanks, Razak, so much for joining us this evening. Before we wrap up, we want to give away some swag this evening. For those of you who have shared the event link tonight, you could have won a swag pack from OfficeN. Tonight's winner is Kabelo Shotlang, who's walking away with an OfficeN swag pack simply for referring a friend. We will be shipping that pack to you very soon, Kabelo. Thank you very much. Another big thank you to our sponsor, Investec, for making this evening happen and a reality. Investec and OfficeN have partnered to bring programmable banking to the tech community in South Africa. If you want to learn a bit more about that, head on over to officeN.com or simply click on the link, which will be on your screen when you exit the webinar this evening. Thanks again to Razak for joining us this evening, and all of you in the audience for your questions. We look forward to seeing you at our next event. Goodbye, everyone.
Yeah, thank you.